the new I-10 could pose an issue, being new per se. We want to see proof of a business, which you said you have, right? You have your businesses prior to that. Okay.
Mhm.
So let's recap here. You have your Canadian citizenship, but not an American one.
Yes.
You have an I-10 number you recently obtained so you could file taxes here. Is that what I'm assuming?
Yep.
Okay. And you have several businesses that you have had here successfully in the States or in Canada?
In the States. Now, some of them are just either empty or brand new for some fun, but our core business has been registered for about a year and a half in New York. And over the last 8 months, it's usually had between 80 to 130K in deposits.
Perfect.
Again, with last month being about $250,000.
Okay. So in most cases, you're right. People want residency or want citizenship. In this case, like you saw, we don't require any of that. We do the I-10. So it works a couple ways. We need the I-10 number to have a record of you, right? That's how we track your credit per se. We'll put credit on your I-10 number. It's going to be non-existent or pretty solid. There's very rare if you get a bad I-10 credit report. It's not enough on there to do bad. So you should be solid on that regard. It's a week old, so there shouldn't be anything bad linked to that I-10 number yet.
No, I haven't touched it yet.
Exactly.
I don't. I want to make sure I move correctly.
Yeah. So it's going to be blank, which is okay. Number two is it's going to require some sort of alternate trade lines because of the lack of traditional credit. They want alternate credits. They're going to ask for 2 trade lines: insurance, utilities, and in that case, probably also some form of rent payment you may have made for the past 12 months. Okay. So
we do this under the company, if that's okay, or does it have to be under personal?
They want to see some sort of personal payments, not necessarily everything. The rent we can do under your company. It may disqualify from 1 or 2 options.
We pay through. It was Zelle, now it's PayPal.
Yeah.
We've been doing a lot of PayPal.
Yeah. But the funds are coming from your business account.
We cover it through the business.
That may be workable. That's not a deal killer. And if so, we still have options around it. We still have something we can work around. So the biggest issue here is your credit, which we discussed, your income, you said is fairly strong. The only thing with it being such a new I-10, we have to have proof of business, which you do have proof of business because you have files priorly. So you're good there. We're going to want to see 3 months bank statements minimum for you, right? And those bank statements, we're going to want to see the strongest. We can only use 1, sometimes 2. So we're looking for cash flow so we can prove the income. And that basically replaces the need for tax returns.
Got it. Okay. So does it have to be American or it could be Canadian?
That's a great question. I would prefer American, but we can dive in and use Canadian if possible.
Because I have yet to, so I wanted to do that over the next 1 to 2 weeks. Now that I have the I-10, to go open up an account at JP Morgan or something like Chase. All of our banking has been just through business, and then I PayPal myself, usually like 15 to 20K a month.
So the tax returns you have are, of course, they're not Americans. You didn't have an I-10 prior to.
Yeah.
Correct.
Exactly.
And then the business statements you have are also not American for the same reason you didn't have an I-10. But you had an EIN, right?
We utilized a trusted family member.
Yeah.
Or like family friend in New York.
Okay.
So we used his social to get the EIN.
Okay.
But he doesn't have any equity. It's just my company.
But you're owner on that company?
Yeah.
Perfect. Then bank statements without tax returns proving you're owner of the company satisfies the condition without the need of tax returns. And then your lack of credit is replaced with 2 traditional trade lines, which would be car insurance, cell phone bill, things of that nature. And that's how we get around that also.
But it has to be through my
those have to be
American bank account?
Not necessarily American, no. Just proof of your name on the accounts.
Oh, then all day long.
Yeah.
Yeah, no problem.
Yeah. So that should work. And then, so let's discuss the options real quick. Once you qualify credit-wise, which you'll be no credit, which you assume so new, your income is strong based on your tax returns and deposits, so you're good there. And then additionally, now we're going to look at the down payment requirement. I have a 3.5% down option. It's out there. It exists. It may not meet you may not get the requirements due to the rent in a property name. I can make an argument and see if we can get the exception. I'm going to dare to say probably not, and you're going to defer to our 10% down program for a purchase in most cases for a primary residence.
Okay.
Well, I'll shoot for 3.5. It may have a benefit for you. It may not, but we'll shoot for both. I know I'm pretty sure the 3.5 or 10% will work. The 3.5, it's 50-50 right now.
Okay. Now, we would want to, because my partner, so he's in Miami.
Sure.
He has overstayed his welcome, so he's also not a citizen.
Sure.
I stay in Canada and I visit. He's just there.
Okay.
Now, he should be getting his ITIN any moment now because I already got mine. We did it at the same time.
Perfect.
But, given someone like his status, because he, doesn't have residency or anything like that, but has kind of overstayed, is there any conflict there?
It's the same thing as you. We see it no different.
And for the property itself, does it have to be a primary residence? Can it be secondary residence?
10% down. 10% down is a requirement for residents. So if you have to go 10% down, you must reside in it. If it's going to be a second and or investment, you'd have to put 25% down.
Gotcha. Okay.
So they're both options for you. There's neither is wrong. You can do both, as a matter of fact.
Okay. And there's no issue we have to show this work visa or green card.
No. All I need from you guys is I need a valid identification passport from your country of origin that's not expired, along with a I-10 letter, and that's what will get us there.
All day long. I mean, we're an open book. It's just the way you were describing it on YouTube.
Yeah.
With this guy Mikasa, I understand it was probably more for the Spanish community, but we've ran into so much difficulty because we're foreigners doing business in the States, and not that I'm sure you guys are open to everybody.
Oh, we are, of course. It is. I'm not gonna lie to you. The majority of our clients are Latino because we're in Dallas, Texas, but that doesn't mean we can't serve. I've done several African American, Nigerian, Indian clients as well. So this is not restricted to only Latinos. But yeah, by all means, it does meet your criteria. Just proof of business would be the tricky part. You got that covered with tax terms, and EINs. So there's no concern there. You're fine. I think it's a good solution for you. And we have multiple. It's not just one program. It's one that you saw in the video, but we have 4 or 5 backups per se, plan B, C, and D as well we can offer you.
Yeah. Okay.
So what I'll do here is I'll shoot you.
Anything else, or is it only real estate?
Well, we do a little bit of commercial, but for the most part, what are you looking into?
Well, for one of our businesses, we're acquiring our first yacht. So essentially, half of our business is renting out stuff in Miami.
Oh yeah.
So exotic cars, yachts, villas.
Sure.
Now we've acquired some investors to go in on a yacht, but again, same situation because me and my partner's from Slovenia. I'm Canadian. Same thing, having a little bit of a difficult time with putting 50 to 70%.
That's not my bread and butter, but I do have connections being in this area that we do come across other stuff. So let me put some feelers out for you on that one. That'll probably be some more angel stuff, but I can definitely look into it for you.
Okay, and then how do we stay connected and go over next steps?
What I'm going to do is I'm going to text you the next steps. Basically, I want to see tax returns for your businesses, your Canadian tax returns as well.
Sorry, so that's what I was saying. So we don't have tax returns yet because we.
So I'm sorry. I want to see your Canadian tax returns. I want to see the business proof of business. So whatever you have an EIN number for that proof of your ownership there. The last 3 months bank statements, personal and business.
Okay.
Your I-10 letter and along with your passport / visa. We don't have a visa. Your passport, and that should pretty much take care of it. And honestly, I would recommend you and your partner kind of take advantage of the situation. You're not married, or are you?
I'm married, but okay. He is single.
Okay. You each do your thing separate. That way, you don't have a need for to kind of take advantage of each scenario. You can each buy a primary residence per se here and take advantage of the low down payment.
That's what I'm thinking.
Yeah.
And for my whole extended family and core family all want to get real estate in the States, and none of us have ever done it before. So my mom wants to do it. Yeah. My uncle wants to do it. Cousin.
Mm-hmm. Now, what defines a primary is going to be of course, where you reside, right? So they're going to ask what draws you to this area. Is it work? Is it whatever it may be? And that's going to determine the definition of a primary.
Mm-hmm. Well, I mean, all of my work is in America, so that's kind of
easy enough, right?
A no-brainer.
Yeah, easy enough. So just a heads
up. But
again,
because like the whole visa thing, it's like that part doesn't matter.
No, it doesn't.
That's the part I'm unaware of, and
maybe most banks here and most banks everywhere, I guess, they're based on government funding and government sponsored entities, and they want some sort of legal status. We're dealing with private portfolio lenders, private investors, and they understand that there may be even situations that don't have that. So as long as we can prove identity with a passport, and then also your legal status per se, or some sort of registration number, your ITIN number. That's all we need. The income and assets. How can we prove it? Bank statements, tax returns, whatever it may be. And in your case, would have both. It's not a stretch.
Well, for business, we don't have tax returns done, like I said, but we're going to do that this spring.
No, so in your case,
I'm behind.
Yeah,
I'm behind on my personal. Now I am going through the process right now. They're already going through my documents. But I am behind on personal taxes. So everything you mentioned I have on hand to provide, except for taxes.
In lieu of taxes, I need to have the proof of existence of a company. So some sort of EIN, DBA. So I refer to taxes. That's to me the fundamentally easiest thing to provide. But in your case, they don't exist.
Yeah.
So I would defer to some sort of DBA, EIN, something like that.
Okay. Cool.
Easy enough?
Much appreciated.
No, likewise. I'm going to shoot you over a text here in a second with all what we need, next steps, list of documents that we discussed in further detail, how to email them to us or how to apply online, upload them, your call, whatever's easiest for you. We'll take it from there.
Yeah. Thank you so much.
No problem. Thank you.
Yeah.
All right. Bye-bye. So that's a pretty normal call, but in Spanish or in English as opposed to Spanish, right?
And that's good that, it's for everybody, it's not just, we think like, oh, it's just Hispanics dealing with this kind of situation, but we see that it's people with all different ethnicities and cultural backgrounds.
It's funny, we focus on Latinos, and we are the majority here in Dallas, but you heard this guy, successful business, just like a Latino, makes $100,000 a month like a Latino, has businesses like a Latino. And he's like, hey, I want to buy property in the U.S. and my visa expired.
Mm-hmm. No, that's awesome, man. To hear, that. No, but yeah, and so that's actually why I'm here, Eloy. Just to ask you some of the questions that people may have that as a real estate agent, I may not exactly know off the top of my head. Or be adequate to answer. So I'm here with you.
Yeah.
To ask you some of the most common questions that I get. Right from a professional, right? And what's a better way to get it than you?
Yeah, no doubt. We do a lot of home buyers. You heard this guy. He owned some property somewhere else. His family wants to buy stuff in the States, and most banks already told him no. He knows his scenario is unique. And most banks, Bank of America, Chase, Wells Fargo, all the big banks, they're going to offer you the normal stuff. There's nothing wrong with it. Right. There's nothing wrong with Fannie Mae, FHA, Freddie Mac loans. Those are great. Those cover 80% of the market, and they do a good job of it. Mm-hmm. But there's those people on the fringe. There's the self-employed, the people that take aggressive tax cuts. And there's nothing wrong with being aggressive on your tax strategy. As long as you follow all your income, it's not tax evasion. As long as you can document your expenses, you're doing okay. But when it comes time to go get a loan from a bank, they're going to say, hey, you didn't declare enough. And now what are you going to do? So your options are, well, let's wait a couple of years and file more taxes, or just want an alternative. That's where we come in. Alternative programs are super strong. We have, like this gentleman said, we have basically programs based on bank statements as opposed to tax returns.
Right. And one of the questions actually is, funny enough, why should a person choose like a mortgage lender instead of just going to like a regular Wells Fargo, to their own personal bank? Can you give me any kind of like pros and cons that they might encounter, when they're applying for a loan?
So a loan is a pretty standard product for the most part. Nationwide, we take data, an application, we take documentation, support the application, we run it through an engine for approval, and it spits out an approval. It says, look, you're approved with these conditions. Here you go. We're all selling literally the same product. Fannie Mae, FHA, Freddie Mac. It's all the same. I kid you not, the same underwriting system. We all log in. We all put in data. It spits an approval. Whether you get an Fannie Mae loan from me, Bank of America, or Chase, it's all the same Fannie Mae loan.
Okay.
So the difference is in how we produce it.
Right.
What's my cost? Do I have cost advantages? Do I do enough business? Do I do enough volume? Am I more local to you? Do I support what you need a little bit better? That's the biggest difference when it comes to a lender, right?
Oh, okay. Is there like a difference between like time? You could say like, would one of them be able to get me in my home faster, or my lending process, is it easier?
I mean, yes and no. I mean, when you're dealing with a Bank of America, one of the bigger banks, and I'm not disparaging Bank of America. I've been a customer of theirs for 28 years. Got my anniversary notice yesterday. You're dealing with typically a call center environment, not always. Okay. They have local branches, but typically that model. I have friends that are Bank of America loan officers, and they're great. I think those are few and far between. They do have a larger volume. They're probably more traditional. Now, if you have been a bank manager or a bank customer for a while, they may let you in their portfolio or whatever their higher class services. You may get some jumbo loans that I can't touch. For the most part, though, any big bank, big four, throwing Quicken in the mix, you're going to get a call center type style environment with a little bit more limited hands-on touch.
So kind of like a 9 to 5 where it's like,
theoretically, some of them do care. Some of them don't. Some of them aren't. Their commission basis probably, but not a lot. It's maybe a hourly plus a bonus. So their incentive to work Sunday nights or evenings or late night and meet you face to face is minimal. Mm-hmm. So you're dealing with a salesperson in every regard with a big bank or with myself. So what's the motivation there? To help you, but how much are we getting? What's on the line? And so working with a big bank, it's recognizable, but does it help the consumer? Is there a cost benefit? Now, I think we discussed earlier, I had a conversation. A gentleman had USAA as a big bank, and USAA is a great bank for veterans, and they do corner the market in a lot of aggressive pricing per se, but you're not going to get the service. You're not going to get your rep's cell phone number. You're not going to get your rep's calling you on a Saturday with updates. It's just not going to happen. They're going to get you a great rate, but you're not going to get it's kind of what you pay for, right? You're just not going to get it.
Yeah, no, I hear you. Right? And the reason that I guess a lot of the clients want to go to those banks is just because that's all they know. There's a lot of mortgage banks. So I mean, but am I able to find something kind of similar? Instead of going to that, can I come, let's say, for example, to ABC Mortgage, and are they able to find give me something similar to that?
Yeah, outside of builders that pretty much try to sue their mortgage companies, there's really no incentive of using one bank versus the other. Now we think, hey, I've been a Bank of America client for 25 years. They're going to take care of me.
Right.
They're going to hook me up, and they're not. There is no special program. We literally, as a bank, good or bad lender, I can't discriminate and incentivize you anywhere for an application. So I can't offer you my 1-day customer versus my 20-day customer or 20-year customer any different pricing, because that would call disparate impact. And that would be a sort of discrimination against or for one or the other. So there really can't be any of that. You qualify based on your merit, your credit, your scores, your income, and that's pretty much how it works. Right?
Okay, no, I mean that's awesome to know. Just because, I've had clients that are veterans that are like, no, I'm not going to check any other mortgage office. I'm just going to go to USAA because, like I said, maybe that's all they know. You know what I mean? But I always tell people, hey, a home's always like, I mean, a home may be one of the most important purchases of your life, so I compare it a lot to open heart surgery. If a doctor tells you, hey, you're going to need open heart surgery, it could, be fatal if something goes wrong. Wouldn't you want to have a second opinion?
Yeah.
So I always try to tell like my clients, hey, you know what, get shop around, don't always just go with what you know. Kind of, be open about looking for more. Who knows? It could be better.
Outside of buying a yacht, buying a home is probably the most expensive thing you're ever buying in your house.
Right. Like the guy said, I'm buying a yacht. What is this?
Right. So yeah, I mean, I don't know anything that costs more than a house besides a yacht. So yeah, I mean,
that'd be really awesome.
So outside of that, your most expensive investment is a house, and you can go through any bank. We're all licensed. We all have to have some kind of training, and we have experience. There's requirements and minimums we have to use, and this and the other. But for the most part, it's go your gut feeling. Go what what feels right. We tend to shop loan officers based on interest rate and price, and there's going to be a little bit of variance between one format versus the other. Maybe a broker versus a bank versus a banker. One company versus the other. Fees become an issue. If you've got a very vanilla transaction, meaning you're a W-2 employee, salary, money's already in the bank, credit is over 700,
right, very smooth.
You can go anywhere and shop around for the best deal with no issues at all. If you're not W-2, if you're self-employed, if you have below 680 FICO score, if you don't have the money in the bank and are working on gifts or transactions, this and the other, it may get a little questionable or hairy there. So you may need to get somebody with some more experience that knows how to work those scenarios. And it may not be the cheapest because the cheapest person doesn't want to put in the extra work for you. They're just not going to do it. They want you to be ready. So the 6%, the 2% rate before margin, that's for the perfect. If you read the bottom, it's got an asterisk when you get a financing. It says for well-qualified buyers. Well, that means 800 FICO scores with money in the bank and this much income prove a certain way. If you don't meet that square, you don't get that rate. Right. So there are options, alternatives. It doesn't mean it's going to be the cheapest, but it's not a bad option. That's where we get stuck. We want the cheapest, and sometimes cheapest isn't best.
No, I hear you. And like I said, these questions come right from the consumers themselves, right? They've asked me plenty of times, Isaac, what is the very first step that I have to do in order for me to purchase a home? And I always tell them, hey, the first thing that you got to do is, either talk to the bank, a mortgage loan officer, and get pre-qualified. Can you tell us why a little bit? Why a consumer needs to get pre-qualified before they can even go look at homes?
Unfortunately, there's nothing that can prepare a consumer for buying a home. Buying a car is not like buying a home. Renting an apartment or a house is nothing like buying a home, getting a home loan. So there's no comparable process that can just prepare you for it. It just doesn't exist. You're going to buy a home based on a price.
Right.
When you qualify for a home loan, nobody tells you this, but you're actually qualified for a payment, not a price. And that payment is based on your income that you can document. So, and then we work some weird magic math behind the scenes and tell you what that math or that monthly payment can equate to in a term over 30 years. Maybe it's in your budget, maybe it's not. So the whole process is a little off the way it's done. It's not rocket science, but it's not as direct as one would think. So the first thing to do is figure out what can you afford, and if that's not what you want, how do you get there, and can you qualify for it, right? And the number one thing we talk about with our clients, and most times, is what we call the CIA, credit, income, and assets.
Oh, okay.
Right. Credit, income, assets. Credit, number one. Do you qualify or not? Pass or fail. It's just that easy. Either you're in or you're out.
And what is that based off? Like a credit score, like a FICO credit score, or
FICO, FICO credit score? And most companies for traditional programs use the middle of the three bureaus. There's this misnomer that it's this bureau versus that, or this one and this one, and it's not. It's the middle of three. That tends to be traditional, what we call GSE, government secured entities, government sponsored entities, Fannie Mae, Freddie Mac, FHA. They go off the mid score of 3, the lesser of 2, or the 1 if there's 1. And that's how we use our credit scores to qualify in that regard. Now, there are alternatives to it. If you're doing some kind of off portfolio private loan, they may take TransUnion, they may take Experian, but that's not the norm. the norm is going to be FICO scores in the mid of the three. And in that regard, we want to see, depending on the program, conventional tends to be around 640 FICO score, and then 640, correct?
640.
Yes, sir, 640. And then on FHA, depending on your option, 600, maybe 580. Theoretically, it goes down to 500, but it wants more down payment. So what I see as a credit score is basically the determining factor. It kind of sets to a lender or someone that's rating you. Kind of, it shows where you stand, your attitude towards credit. And the higher the score, the better attitude you have. The lower the score, the worse attitude you have, and you're perceived or risked based on these scores. So 880 is on the high scale. Perfect. You're not going to be any risk. You tend to get the better credit score, better interest rates, lower fees. Once you start sliding down, you start getting riskier and riskier and riskier and riskier to where at some point it's all risk, and I'm not going to lend you because it's just not worth it to us. So that threshold tends to be 500 with extra compensation factors, but typically for a loan, about 600-ish or so. And don't base your opinion on Credit Karma, because those aren't really credit scores. Those are promotional credit scores. Like they're close, but they're not exact. They're guessing.
I'm glad that I'm talking to you, because like I've heard like family members tell me, oh, you need this amount, X amount of credit score to be able to qualify. And that's why I haven't been shopping, because right now I didn't know that I could get approved for a loan, and what about for the people that aren't just there, right? Because I've had a scenario where somebody has been paying monthly to restore their credit. What do you offer them? They've been in the market to look, but they're just not there. They need just that extra little bump for their credit score to get approved.
Generally speaking, I'm not a fan of credit repair in general. There are some characters in that business that just don't really play by the rules, take advantage of some misunderstandings. Credit repair is really designed for erroneous information, stuff that's not factual to come off, stuff that people are keeping on that shouldn't be on there. If it truly is your credit score and credit history, it's going to be real hard to get that removed. I mean, if a creditor that you burned has documentation that you signed and you burned them, it's not going to go away. It just takes 7 years to go away. But if it wasn't, and if it's not true, and if it's not yours, then by all means, go ahead and do credit repair. Right. But if you're expecting that late payment you made 2 years ago to fall off after 6 years, if you're disputing, you're going to spend $100 a month for no reason. And I always say it's better to start new credit today than wait until reestablished and until we take that stuff off, because establishing credit today, it's just a better long-term play as opposed to what happened 2 years ago. An account today reflects your attitude today versus your attitude 2 years ago when that account went bad. And that's what we're trying to get a gauge on. Who are you right now, right? Okay. Are you a 700 FICO score today? Or are you a 520 FICO score? Because 520 is a lot riskier. And based on that,
and I think that people do understand that. And like you had mentioned to me earlier about the failing a grade. That's what it can be compared to, right?
Yeah, it's like failing second grade, right? I didn't pay off a collection 4 years ago, and now I'm going to go back and pay it today. I can't go back to second grade today and do my homework for second grade. It doesn't make me an A student today. I don't erase my mistakes from the past. That doesn't make me a good student. I have to go and do homework today. I need to go enroll today in a class, and I'll prove to you I'm an A student today. Going back to Miss Johnson second grade, here's my homework, doesn't make the F go, I fell second grade, right? I just can't do anything about it. It's like a collection. I go back into my collection, it's still there. It's still a collection. I still failed. So I can't remove it.
You're paying these companies off, and they're sending out audit letters. They're just not going to go away, or
typically not. There are a few that will do pay for deletion, but that's becoming fewer and fewer. There are professionals that do this all the time, but from my experience, it does take work. And if they do come off, and if they have something on you, they're just easy to put it back on you. So if it falls off, it may be temporary. So rather than focusing once again on the past, start on the new today. Go open up 2 credit cards today, and you'll see in 2 months your scores are at 40 points. And you spent nothing.
Oh, wow.
Right?
That's awesome. Yeah,
it's always a recommendation we give our clients is, hey, look, you're borderline. Go up to 2 accounts, and then by the time the process gets started and you get there, your score is going to be a lot higher.
That's awesome. And now that we are talking about this kind of brings me to the next question that other of my people, the clients I've had in the past, they've asked me, hey, Isaac, I'm trying to help out a relative, right? They're asking for my help. My credit's not so great. You know, I'm like I said, I'm looking to buy a home. But what happens if I co-sign for them, let's say for a car, for whatever it is? What will that affect my chances of getting a home in the future? And I always direct them, hey, you know what? I'm not a loan officer. I cannot give you like let's say for that answer, but let's say for example you are someone who is qualified to answer questions like that.
So buying a car, it's funny enough, it always happens the same time you're buying a house. I don't know why. Maybe a life
it's crazy. Yeah.
A life change is happening. So you're maybe have a kid or you're moving, you need new stuff. I don't know why, but they always seem to run simultaneous, and they shouldn't. When you're looking at a home, we're qualifying once again on the payment. So if you're making, let's just say let's just say $5,000 a month, and the bank will lend you, for sake of ease, let's say 50% of that $5,000 will be your total payment for your household, total household obligations. So 5,000 at half is $2,500. If you don't have a car payment, at $2,500 can go towards your house.
That's right.
All of it. If you have a car for, let's say, $1,000 because you went and got a nice Escalade or F-350, that $1,000 comes off at $2,500. So now you're left with a balance, $1,500, which sounds like a great house payment, but it's not going to get you very far.
But so even if it's like not I'm just co-signing, right? It's like just in case, it will still affect my chances of getting a home.
In the sake of co-signing, we're going to want standard guidelines, 12 months of proof of payments and the other person's account to omit that as liability on your behalf. So it can hurt you. It can cause delay. And if they pay late, it doesn't matter how many payments they make. It's going to hurt you regardless. Right?
Yeah. So, I mean, would you recommend somebody who's in the process of getting a home?
Never.
Okay.
Never. I'm not going to finish that question.
And like I said,
never.
Sometimes, the uncle, the brother, the cousin, hey, look, and so you should. Okay.
I don't want to help. I don't want to help you stop from your dreams, but let me get my dreams first, and then I'll help your dreams second. Right.
Okay. No, that's awesome. So let's say once I do get to that point, the 640, for the FHA or for the conventional, what's the next step? I talk to you guys. What do I bring? What documents do I need?
So we talked about credit. We talked about income. So income is the next piece. What kind of work do you do? Like the bank wants stability. It's all about risk. We want to make sure that you can return the money I'm lending you, and can we document it? You say you make $20,000 a year, but your tax return said $24,000. Where's the difference? Or you're working 40 hours a week, but your pay stub say 30. So where's the difference? And if you're looking to qualify for the maximum amount, we want to see consistency. Remember, you're trying to convince the bank to lend you money. Nobody is required to get loans. We're not required to give them out. We're required to be non-discriminatory about it. So when you qualify for a loan, I can't do any favors. We have to be the same guidelines across the board. Black, white, brown, yellow, pink, doesn't matter. We have to be,
Right.
So when you're trying to get that higher loan amount or that maximum amount because you fall in love with the house, the consistency matters. 40 hours a week every week is great. 50, great. If you can prove it, we'll use your overtime. If you're doing 38 one week, 50 the next, 20 the after, the bank has no idea what your income is. You're too inconsistent. If one of your tax returns show you made 200 the next 12, which one's right? 240 or 200 or 12,000? We don't know. It's too inconsistent. So we have to have some consistency, and we want to see some sort of rhythm to your income, so we can kind of predict how much liability you can afford. So it's all based about the income you can document, not what you say. And that's weird because if you go towards car payments, most car loans don't require documentation. You put an application. I make this much a month, right? Here you go. Here's your Escalade. Here's 2. Take them, right? Not today. Not with loans. We have to document every single thing. So that's the big difference.
And so now that you touch up on the documents, what if I can't provide those documents? What about the people that are the business owners that don't have that, like the ITM people, the DACA people? How are they able to get a loan? How do you offer anything for them?
A lot of our clientele is self-employed. A lot of them are that because the traditional loan isn't catered towards them. The traditional loan is going to require tax returns. And most savvy business owners are going to be tax savvy, and they're going to take advantage of all of the deductions they can, and they should. There's one-time expenses for this, that, and the other. There's nothing wrong with that. There's nothing illegal about it. Now, once again, it's only legal to not declare income, not to be aggressive on your tax deductions if they're accurate and you can prove them. But when it comes to time to buy a house, you take all those deductions, it doesn't look so good on the bank because we're going off of your net income, not gross, net after all your expenses. So that new car you just bought, expense against your property, is going to hurt your net income and maybe how much you qualify for in the future. The beauty of what we offer here, what we do is it's a little distinctly unique. We have, more than 20 options for bank statement, and several, more than a dozen, allow the ITIN option, ITIN. So that's what makes us different. We cater to self-employed. We understand their business models the best. We take an average of bank deposits, whether it be 3 months, 12, or 24. And from there, we determine the income that's more true and actual based on an expense ratio. And then from there, that overrides the tax returns because we understand the tax return income probably isn't very accurate. They're not making $2,000 a month. They're making $20,000 a month. So we qualify based on the higher income because we can document it.
Okay, that makes sense, and yeah, and I get why business owners would want to do that.
Of course.
But yeah, Eloy. So I was gonna say, yeah, these are completely different programs that you guys offer, rather than just conventional FHA. And what are the other ones, if you don't mind?
So the normal gamut, right? If you go to a traditional bank, they're all going to mention all the alphabets: FHA, Fannie Mae, Freddie Mac, VA, USDA, all those kind of deals, conventional, right? Those are great. Those are a big part of the market. Very traditional. Most of those go through a underwriting system. You type an application, get it in there, pull in a credit report. You're getting approval probably in 5 or 10 minutes, right? It's pretty consistent. The way they repeat through me, through any bank, it's fairly consistent with the guidelines. Now there are other options. There are what we call portfolio loans, where there are private investors. There's actually cash investors that come in sometimes. We have a wraparound feature we're offering these days for buyers that have a hard time getting deals done. There's ways to get creative about it. They're all legitimate, bank products. Some are non-QM. You may have heard of that term, alternate documentation. But the Fannie Mae FHA loan really isn't guided towards self-employed unless they're following light, aggressive tax returns. And there's nothing wrong with either one. You can do either or. It's your prerogative how much you want to pay in taxes. But we do have alternatives which make us very attractive to self-employed and or the ITIN buyers.
Oh, okay, man, that's awesome. You see, there's a lot of new information that that is out there that we don't know, because everything that we hear is about word of mouth. That a friend might have told you, a relative might have known you, but there's these programs like you're telling me that are out there to help the people get a home.
Yeah, especially first-time home buyers. There's a lot of miseducation on the first-time home buyer. People assume it's an advantage to be a first-time home buyer. Like, oh, I'm gonna get my first home buyer grant. Give me get that money. And in reality, it's not an advantage. It's a disadvantage.
Really?
You have no experience as a homeowner. How do I know if you know what you're getting into?
Like with FHA, or I thought it would being a first. I see it all the time on TV.
I know, right? Like, hey, special program for home buyers.
I thought there was hope for first time.
There is, but they restrict your access to the bigger pool when they do that for you. So what you gain, you lose, right? So essentially, you may get assistance on this product through another program, but it may come at a higher cost, right? So that's what you have to be mindful of. Is there is an option for you, but sometimes it may not be the best or the optimal option to fit your scenario. Now, if it's needed and you don't have another option but to take the assistance, then go ahead and take it. There's nothing wrong getting to the house. But if you have your own money and you can get a lower rate, then forget the first time home buyer scenario, because it may not be your best overall solution for you.
So what if I have all cash already? Let's say that I am a business owner and I've saved up for years. How can I get a home?
All cash. You can go to any bank, they're going to tell you you're crazy. You have no proof of income, no proof of assets. Just going to tell you, you come to us, we have 3 or 4 options that we can take some of those cash deposits. Once you put them in the bank, we can season them, just say for a month or 2, not even 90 days. Get some cash flow on there, and we can prove that you're in business. We'll get you a loan.
Oh, that's awesome, man. Yeah. And I'm glad. So any kind of related questions, they should come to you, you know.
It's a structuring. Sometimes getting pre-qualified is a 1-hour process, 5 minutes. Sometimes it's a 2-year process, because it takes people time to get to the right situation. And there's a lot of, like you said earlier, a lot of miseducation, a lot of misunderstanding. What's this? What about that? My tío said this. My tía did this. My primo said this and the other. Everybody's situation is different, because everybody's life is different. And we're trying to gauge your life and risk and figure out how to qualify you based on your scenarios.
So what does that mean? Like, what is an average time that I can be looking at in order to get a loan?
So
I'm trying to move in by
tomorrow. I got you. So we'll go back to CAA, credit income assets. If your credit's over 600, 640, you're in the game. If your income is over, let's just say $5,000 a month, and we can document it, then you're in the game. Your credit is good, your income is good, your assets. Let's say you've got 5% or so roughly estimated in closing costs and or down payment, then you're in the game. 1, 2, 3. You pass credit, income, and assets. You can get qualified in probably an hour or 2. Now, the word qualified comes across real loose. I say qualified is like the credit card application you got in the mail. You're pre-qualified for a credit card. You don't have it in hand yet. You're a good candidate for a credit card. You may get it one day. Apply right now and you'll get it. You're pre-qualified for a credit card. That's what a pre-qualification is. So it sounds good, but that doesn't mean you have a credit card in hand.
But would I still be able to present an offer with that, or like with my real estate?
Not in my world. In some banks, some of the bigger banks take verbal applications. I wouldn't do that injustice to you, because you may not define certain things the way I define certain things. What you define as income may not be income to me. Assets, credit, it may be different. So we're going to go a step further, and we're going to ask you to volunteer some documentation to us. We're going to ask you to give us your pay stubs, your tax returns, your bank statements. Once we see that, we can validate the information provided over the phone. At that point, we'll give you a pre-approval letter stating, hey, you've been through the gamut. We've seen your credit. We've seen your income. We've seen your assets. I can document it and verify those figures are accurate. At that point, you have a pre-approval letter, not a pre-qualification. And at that point, closing is just, a formality.
Okay, so it's unique for everybody. There's not like a certain day, like, hey, I'm going to get this loan in a week or that same day.
I've had clients apply online, get me documents and approve in 5 minutes. I've had clients apply online and never get application, never get approval, because they just never finish the course.
Is everything online? Do I have to upload it?
We work how you work. We can work online. We're convenient. It's convenient for all of us. Online, upload, super easy. You actually, in our application, you go online, you apply, get a copy of credit report for free instantly. And then you can open your documentation that we requested on there as well. We'll call you the next day or that evening. Hey, here's what we need. So we have. If that doesn't suit you, you want more personal touch, come by our office. We've got 3 or 4 people here at all times. We can visit with you. If you want to meet on the weekends and nights, we're here for you also. Zooms, just like this, we do them all the time.
Let's say that my client goes to you guys, right? So how does it work? Like, if they pull my credit score, is it going to hurt me if I go to another place? Am I going to get a hard credit check?
That's a great question. And actually, we're right now in this new era, 2023, is kind of a transitioning time for the business. Historically, I would say, as soon as you apply, you're going to get bombarded with phone calls. Your scores may drop a point or 2. We always get clients saying, hey, you pull my credit, it dropped 20 points. It's not possible. An inquiry would drop you 5 points, worst case scenario. Now, if you go to a car dealership and they're shopping for your best rate and they shot your credit across 20 agencies, your score is going to take a hit. But when a mortgage does that, we don't do that. We don't go to 5 lenders and try to qualify you in 5 minutes. It's not how we do things here. We have one report, and it's transferable in most cases to our investors. So we're not going to pull your credit 20 times. We're just going to pull it once. Now, if you go apply at a different bank, you're going to pull another one. You have the 30 to 45 day window to get that inquiry to count as one. So if you pull next week, it's the same inquiry I got last week. And the next week, it counts as one.
If I go visit 3 banks right after I had a meeting
every other day,
it's not going to keep dropping my score.
The same inquiry counts one time.
For how long you said?
45 days.
45 days.
45
so like
days.
about a month and a half.
I say 30 because you just don't know. We don't want to time it wrong.
Okay.
But yeah, I say 40, 45. But I say 30 just to be conservative.
Okay.
But yeah, so if you're going to shop, 30-day window, shop around, and there should be zero impact to do that, because we can always call the bureau and say, hey, that's a mortgage inquiry, count as one, and they'll consolidate it.
Oh, okay, man, that's awesome, and thank you, Eloy, for all this information.
Yeah, of course.
All the viewers out there that may have questions and don't know how to ask or don't want to ask because they don't think that they're ready yet. What advice could you give them?
Do your research. Get ready. Take it all with a grain of salt. It's not all for everybody. It doesn't all mean everything to everyone. Look for alternatives. Try traditional, try non-traditional. We get a lot of clients that don't believe us when we tell them they're approved because they've been declined so many times other places. Oh. It's a shame that they don't believe us, but it's true. We do that. Is it going to be the cheapest? No, because you're not the lowest risk consumer. And what I learned in finance school is basically it's about economics and risk and reward. And if I have $1 to give, and I've got 2 clients, one has an 800 FICO and one has a 600 FICO, I'm going to lend to the 800 FICO score. He's less risky. Right, that increases my odds of getting my dollar back.
Yeah,
600 FICO is questionable. So
you probably trust that person more.
So you've got to figure that out. Where do you put your situation in with a bank as a consumer so that I can be chosen first? And I know we don't think that way. We think, hey, they have to loan me, and they don't. We want to convince them and entice them to lend us at the best deals possible. And the way you do that is the highest credit score wins, the lowest debt to income ratio, and the most cash on hand. Those are things we want to see. And very likely, most time, people barely squeak by on all 3. I have the lowest credit score. I'm trying to get the maximum amount, and I barely have enough. So you may qualify, but just barely. So one thing goes wrong, we have problems. So we're trying to make sure that doesn't happen and give you kind of a scapegoat and ways to get around that. That's our advice to you is let's not be so marginal in all of our issues and all of our qualifications.
Okay, well, thank you, Eloy, for your time.
Of course.
Like I said, I'm pretty sure a lot of the viewers appreciate this, this information that, is out there, but a lot of people just don't know, and it's holding them back from making that purchase, So, like I said, thank you. And I mean, if you want, Eloy, we can start meeting and having some of these meetings based on questions that people have asked.
I have no problems. This literally started organically with a phone call we got from a consumer. So we get questions all the time, right? So if you want to go and move forward and start doing some basis, maybe we do a question session during the week, ask questions, then we come back and answer them one time, or whatever we want to do for it. But I'm all for it.
Okay. All right, guys. I'm Isaac Jara. I'm a real estate agent. I'm here with
Eloy Benavides at
What do you do,
Mortgage.
What is your job title?
That's a great question. What do I do? I'm a loan officer. Been here 25. Been here 25. Doing this 25 years, and it's lending for sure, but it's a little bit more than that these days. It's kind of going behind the scenes, putting things together, creating an environment and systems and services that kind of help our consumers not just address the lending requirements and obstacles, but also some of the housing, credit, and other, let's say, accounting issues that happen along the ways to help people get into homes. There's so much more than just applying for a loan and education, and it takes a village sometimes to get you into a house. But we're okay. We've got it ready for you. Just got to make sure that you do your part, and we're willing to do more than we'll do our part.
All right. Well, let's get a loan going. All right, Eloy. Thank you for your time.
Good stuff, bro. Appreciate it, man.